The long weekend in the United States is over, but the standoff between Republicans and the Democrats in the Congress might go on. Optimism about the debt ceiling deal is dampened by statements from Republicans. Meanwhile, stock investors are assessing risks, and the overall picture is smoked by the prospects of a further monetary tightening. Another piece in the puzzle is the Consumer Sentiment Index. Trading floors in the United States and the UK were closed on Monday, but today futures on the US stock indexes looked a modest upward trajectory. On a Friday, the benchmark stock indexes grew by more than 1%, but the Nasdaq in particular jumped by over 2%. The indexes traded mixed in the New York pre-market today. The Dow Jones went down under the Chevron's pressure. The S&P 500 and the Nasdaq gained 0.16% and 0.6% respectively. The major stock indexes could extend the dynamics unless US legislators come up with a surprise. The S&P 500 is expected to trade in the intraday corridor between 4,180 and 4,260 points. The catalyst for growth on Wall Street today is the optimism about artificial intelligence. This is bullish for the high-tech sector and the S&P 500 and the Nasdaq in particular. Nvidia shares leapt by 4.5% in the pre-market. The company unveiled its plans yesterday on building Israel's most powerful AI supercomputer to meet the growing demand for AI-based applications. Following the news, Nvidia's market value topped $1 trillion for the first time on Tuesday, making it the first US chipmaker to join the trillionaire club. The company's shares rose to $406 in a pre-market trading. Meta, which was valued at roughly $670 billion at its last closing, hit the $1 trillion market cap milestone in 2021, while Apple, Alphabet, Microsoft and Amazon are still in the club. AI companies have received a major boost after Nvidia stunned investors last week with its earnings forecast that beat analyst expectations by more than 50%. Wall Street analysts called Nvidia's forecast incomprehensible and cosmic. Despite this, the sector rose along with the Philadelphia Semiconductor Index by more than 13%. Shares of big AI players, including Microsoft and Alphabet, were up about 1% on Tuesday before the opening bell. Other chip makers, including Advanced Micro Devices, Marvell Technology and Intel, added about 3% each. Tesla shares rose by 4.2% and were set to trade higher on Friday after Elon Musk arrived in China's capital, Beijing, on Tuesday, where he is expected to meet with the senior Chinese officials and visit Tesla's production facility in Shanghai. Shares of Ford Motor added 3.6% after Jefferies upgraded the automaker's rating to buy. Obviously, optimism about the high-tech sector is growing and supporting the indexes today, but further political debates around the public debt ceiling may overshadow the market sentiment. US President Joe Biden and Republican Speaker of the House Kevin McCarthy on Sunday signed an agreement to temporarily suspend the debt ceiling and cut some federal spending. The US House Rules Committee said it would meet today to discuss the deal. However, some Republican lawmakers today said they would oppose the bill, so the bipartisan agreement could face a rough path through Congress. While the extreme wings of both parties have expressed some concern over the details of the agreement, the market is suggesting that the moderates will see it through to Friday. Both houses of Congress must vote to raise the debt ceiling by June 5th. The Treasury will then sell up to $1 trillion in new debt by the end of the year to replenish its purse. which could cause volatility in the bond market amid shuffling of cash management strategies. Despite the ongoing confrontation, investors reassessed the risks of a default and now expecting modest risks. Relief from a likely increase in the US debt ceiling this week is tempered by the uncomfortable prospect of a higher Fed's interest rates. Investors also abandon any hope of a monetary easing in 2023, after some US inflation indicators happen to be tighter than many had predicted, and in the face of the US non-farm payrolls for May, expectations are growing that the Fed will raise interest rates again next month. Futures markets now see a 60% chance that the Fed will raise rates by another quarter point to the 5.25 and 5.50% range at its meeting on June 14. Another puzzle in the overall picture of the day will be the fresh consumer confidence index for May. Last but not least, the House of Representatives is considering a bill on the national debt ceiling today. Fed policymaker Thomas Parkin will speak, which may have an additional impact on market sentiment. The growing risk on mood and hopes for a vote for the US debt ceiling until the end of the week set the stage for the US dollar's decline. Its index sank against the euro and the pound sterling and fell below 104 points. It was trading at 103.90 before the opening bell, 0.36% down. The instrument is likely to trade in the intraday corridor between 103.70 and 104.50 points. The US dollar slipped off its highs due to the prospects of the resolution of the US debt limit deal. The index gave a muted response to lawmakers' statements on some differences. 90% of market participants are certain that the long-awaited deal will be settled in due time. Nevertheless, once the US default is averted, it will be too early for bearish forecast for the US dollar. Indeed, some factors could wind down risky assets and revive demand for safe haven assets. Cutting government spending could help the Fed cool down stubborn inflation and assure the Fed to stop the tightening cycle. It's unlikely to happen in June. At least the futures markets are 60% sure of this. In any case, it's too early to talk about the real medium-term prospects of the dollar index. If a final decision is not reached, the index will remain in the range of 103.50 and 104.50, while high volatility in the foreign exchange market will continue. The Canadian dollar could recover amid the US dollar's pullback. Still, the loonie's rally is capped by a fall in oil prices, having inched down by 0.08%. The USD card pay is trading at about 1.3570. The intraday corridor is seen between 1.3550 and 1.3600. The Canadian dollar is under pressure due to the fact that the oil tumbled by almost 2% today. The concern over the debt ceiling deal discouraged the energy market. Mixed messages from major oil exporters have clouded supply prospects. The debt repayment deadline almost coincides with the OPEC Plus summit slated for June 4. Uncertainty about whether they will increase production cuts amid the recent price drop is mounting. The Saudi energy minister last week warned short sellers to beware of a pain, hinting that OPEC Plus could cut output rates. However, comments by Russian oil officials indicate they are opposed to keep production unchanged. In April, Saudi Arabia and other OPEC participants announced further cuts in oil production by about 1.2 million barrels per day, bringing the total OPEC Plus cuts to 3.66 million barrels per day. On a Tuesday, Brent crude futures dropped by 1.6% to trade at $75.80 a barrel. WTI futures skidded by 1.9%. All in all, Brent price has plunged by 38% in the last 12 months, the sharpest annual slump since 2020. The crypto market perked up today, though assets are trading moderately higher. Bitcoin has gained almost 0.9% intraday to trade at the level slightly below 28,000. Popular altcoins are trading mainly in the green, and today the market's attention was riveted on Binance and Bitcoin at a discount. Bitcoin was down 20% on the Australian arm of Binance on Tuesday and traded at 23,060 compared to competing exchanges, a sign that clients were eager to close their positions quickly. The price of the asset was around 34,000 Australian dollars on Binance Australia, compared to around 43,000 Australian dollars on BTC Markets, another Australian cryptocurrency exchange. Bitcoin has been listed at around $27,900 beyond Australia on other exchanges. In addition, it was announced today that Binance has appointed Richard Tang, with extensive regulatory experience, as its head of all regional markets outside the United States. As for the intraday outlook for Bitcoin, it's trading within a wide corridor between $27,650 and $28,300. After a downward correction on Monday, a breakout of the borders could push the price either down to 27,000 or up to 29,000. And that's all for today. We keep monitoring the financial market situation, and we wish you successful trading, and subscribe to our channel, and see you online tomorrow.